Hi and welcome to Swissquote's Daily Market Talk. It's Monday, September 22nd. The week starts on a mixed note. In one hand, the Fed optimism continues to boost risk appetite across the global financial markets. But on the other hand, geopolitical tensions and Donald Trump policies raise questions about global growth prospects and their implications. So the US dollar is better a bit this Monday morning, whereas the precious metals attract hedging moves, hedging motives from investors, and uranium rallies on fresh executive orders from Donald Trump aiming to quadruple the nation's nuclear capacity by 2050. So we will talk about all that and more. But before we do, please keep in mind that opinions are my own and this is not financial advice. So the week starts on a mixed note. The announcement of Federal Reserve rate cut last week has given a boost to financial markets and risk appetite, but the news that the BOJ will start offloading the ETF holdings raised worries. Remember, last Friday that the letter may derail the global risk sentiment and weigh on the equity valuation. So Nikkei was under a decent selling pressure last Friday, remember, and the STOXX 600 index and the FTSE 100 index in Europe were slightly bearish on Friday, but both the S&P 500 and Nasdaq in the US couldn't care less. Both indices indeed advanced and closed last week at a fresh record high level, even though the US 2-year yield that best captures the Fed rate intentions consolidated a touch below the 3.60% mark after having rebounded after the FOMC decision, and the US 10-year yield rose to 4.14 level. On the geopolitical front, the discussions between Trump and Xi Jinping went reportedly well. We don't have all the details, but we know that there is substantial progress for TikTok, and the two leaders will also be talking more about trade and tariff policies in the coming weeks, while Australia, Canada, and the United Kingdom recognize the state of Palestine that could eventually revive political tensions with the US, as the move didn't please Israel and it didn't please the US either. On the monetary policy front, while the People's Bank of China this morning left its policy rate unchanged at record low levels for the fourth consecutive month to counter the negative implications, the negative impacts of the tariff war with the US. But the Chinese stocks are trading with limited appetite this morning at the start of this week on probably a certain disappointment that we had after the talk between Xi Jinping and Trump. Well, didn't really bring more clarity and more details regarding, well, the trade tensions between the two. Nikkei in Japan, on the other hand, is better a bit this morning on softer Japanese yen, and a gauge of Asian equities is trading higher at the time I am talking here, while Indian stocks, especially their technology stocks, are under pressure this Monday morning, as Donald Trump is now bringing services into the trade war, because on Friday he actually called for H-1B visa applications to cost $100,000, whereas so far these visas would just cost a few $1,000s depending on the complexity of the visa. So this means that employing foreigners in the United States will become very expensive, much more expensive than it is today for companies, and the talent crunch that will probably result could increase the cost for companies by 4 to up to 13%, according to an analyst at Jefferies. And the latter would obviously have a negative impact on employment in the US and eventually growth in the short run, and I think that it will certainly help accelerating the AI adoption in the longer run. And on the goods front, a freight index suggests that the freight shipments in North America have been unsurprisingly falling since the start of this year due to the trade tensions between the US and the rest, and this index actually retreated to the lowest level since the pandemic months. But lower imports have not yet led to significantly higher consumer prices in the US, and growth in the US actually improved last quarter after a decent hit in the first quarter of this year. And due this week, the latest US second quarter GDP update, that's due Thursday this week, is expected to print a 3.3% growth with price pressures at totally acceptable 2% mark, while the Federal Reserve's favorite gauge of inflation, which is the core PCE index, is not expected to hint at any potentially or alarmingly mounting price pressures on Friday this week. And besides that, many Fed members are due to speak this week following last week's Fed decision to start cutting the interest rates, and they are mostly expected to keep highlighting the necessity to give the US economy enough support to counter the weakening jobs market there as long as inflation remains under control. But so far, there is little reason to be worried for the equity bulls because the Fed will likely continue to lower its interest rates in the coming months. The earnings outlook for the S&P 500 and big technology companies in the US improves into the next earnings season. The soft US dollar also gives an extra hand by increasing the overseas revenues when they are converted back to US dollars for these companies reporting, and the AI theme remains intact as well. So in this respect, Oracle jumped 4% on Friday on news that they are talking with Meta right now for around 20 billion US dollar worth of a cloud deal, while Samsung in Korea jumped 4% today in South Korea on news that the company won a long-awaited approval from Nvidia for its high bandwidth memory chips. In the FX markets, the US dollar is better a bit this morning since last week's actually FOMC announcement that was certainly a bit less dovish than broadly expected by analysts out there. So the euro dollar looks toppish today since last week actually, with deeper retreat possibility toward the 50 and 100-day moving averages looking increasingly likely in the coming weeks, while cable on the other hand already slipped below its own 100-day moving average and is testing its 50-day moving average support to the downside this morning. Here as well, a broad-based US dollar recovery will likely keep the pair under pressure in the coming weeks. In precious metals, gold kicks off the new week with strong appetite on rising geopolitical tensions around Gaza, while silver is propelled to a fresh high since 2011. In the energy space, while US crude kicks off the new week on a positive note, as Europeans are now looking increasingly to reinforce their sanctions against Russia that has been violating the airspace of some European countries in the eastern side of the continent that also happen to be NATO members, ringing the alarm bell on the continent regarding the Russian situation, and the European defense and aerospace companies remain highly bid due to these rising and sustained tensions on the continent. But the real action was happening on the nuclear front actually on Friday, because global ex-uranium ETF actually jumped 8% on Friday's trading session to the highest level since 2011 after Donald Trump signed executive orders aiming to quadruple the nation's nuclear power capacity by 2050, while simultaneously launching a cross-Atlantic technology prosperity deal with the United Kingdom. So the latest deal actually comes as an addition to all of the nuclear deals that companies like Meta and Microsoft are sealing recently to make sure to have enough energy to run their massive data centers. Now, nuclear developments obviously did not resonate well within the clean energy space. The clean energy ETFs actually were under pressure on Friday, but I still believe that reviving nuclear will not necessarily derail the shift towards the clean energy sources, because I think that we will probably need all the energy in the world to satisfy our increasingly digital and artificial intelligence demands. So, investing in energy, nuclear or clean energy, are major pillars for technology plays, I think, along with cyber security, of course. But anyway, this week we will have the flash PMI numbers that will probably give us an idea on activity and sentiment across the globe. And as I said, the US will be revealing its latest growth and inflation data on Thursday and Friday respectively, and the Swiss National Bank is expected to maintain its interest rates unchanged when it meets this Thursday. So we will talk in detail about all that throughout this week, but this is all for this Monday. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below, as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.